Hi, I'm Kat Traywick with Bloomberg's Energy and Commodities team. And with me today, we have three great panelists who I'll introduce briefly here. First, we have Julian Deschâtelets, a managing director in Brookfield's Renewable Group, one of the largest publicly traded renewable power platforms with more than 19 gigawatts of capacity. Next, we have Todd Stack, the CFO of TransAlta, which is one of Canada's largest producers of wind and Alberta's largest producer of hydroelectric power. And finally, we have Beth Summers, who is the Executive Vice President and CFO of Superior Plus, which distributes and markets propane and distillants and supplies specialty chemicals in North America and elsewhere. Thank you all for joining us today. I'm going to kick things off with a COVID question. We're obviously in an interesting business climate right now. So can we just start off with you telling us a little bit about what your financing strategy looks like and any challenges or opportunities you've seen during the pandemic? Well, let's start with Todd.
Oh, great, thanks. So TransAlta, thanks very much for having me on the conference as well. It's great to be here. It's a pretty exciting time at TransAlta, and just to, as we came into 2020, the company was actually in really good shape financially. We had, I think, about $1.7 billion of liquidity coming into 2020, and currently still sitting on about $1.5 billion. The last 5 years, we spent a lot of time deleveraging the balance sheet and focusing on asset level financing. We had closed a tax equity financing right at the end of 2019 in December, and that really was the final step of financing that we needed to get through the entire 2020 capital program. So what we're doing right now is we're looking at a project financing right now on one of our Australian assets, and that will really is setting us up for the 2021 financing plan that we have.
Great. Beth, same question.
Yeah, I think from our perspective, similarly, right now we're somewhat holding tight and we're being opportunistic. I mean, I think from our perspective, we do have a healthy maturity profile right now. We don't have any significant maturities until 2024. With the, I'm going to say, record run that we've somewhat seen in the high yield market, I think from our perspective, we would potentially access if the rates went low enough from our perspective for it to be opportunistic. So again, I would say we are monitoring bank markets, however, and that's fundamentally just looking at extending our credit facility. Historically, we've every year extended it out. At this point in time, typically we would look in sort of the March, April timeframe. So needless to say, that wasn't an ideal time to be doing anything from a financing perspective. So we somewhat, looked at it. We knew that there was premium pricing and frankly, shorter tenors. Now, we can be opportunistic there as well. We'll keep monitoring it. But again, it doesn't mature until 2024 as well. So again, hold tight, be opportunistic is really our mantra at this point in time.
Julian, I gather that this has been a pretty interesting year for your business.
Yeah, it's been a busy year. And speaking to your question, we've had, we maintain one of the best balance sheets in the strongest balance sheet in the sector. We maintain a BBB+ rating, and we maintain well over $3 billion in liquidity. So this was a time that we wanted to capitalize on. And when I look at our capital structure, we've been pretty busy over the last 9 months. We've basically raised 775 million Canadian in the bond market, tenors of 10 to 30 years. We issued our inaugural perpetual pref in the U.S. market. In addition, we've raised over $1 billion in the project bond market. So it's been a good year for us, and we're looking to do more before the end of the year.
Julian, question for you. What is the best market right now in the U.S. or globally for financing power projects?
Yeah, I would say generally there's meaningful amount of capital being deployed in our sector globally. We've seen strong markets in Canada, the US, and Europe. And so I would just generally say that this asset class is one that has seen a significant amount of capital being deployed to, and so financing good projects on good terms is definitely achievable currently.
Related question to that, and Todd, feel free to weigh in here also. With regard to the U.S. market, Bloomberg New Energy Finance has put out a forecast saying that they're forecasting a U.S. clean energy capital shortfall of about $23 billion as the pool of tax equity financing dries up. So my question for you is, how critical is tax equity financing to U.S. renewables development right now and going forward?
Yeah, I'll jump in there. So we have tax equity is important to TransAlta. That's how we financed the Big Level project and the Antrim project, as well as some of our prior wind farms. We have half a dozen early stage, mid stage development wind projects, about 1,000 megawatts, a little over 1,000 megawatts, and they really do depend on tax equity. So having that market come back to life is important for financing, for us to be competitive against those people who can make use of the production tax credits and other benefits down in the U.S. So definitely very important. Just to echo on some of the capital markets in general, as Julian mentioned, the U.S. debt markets are very deep, very supportive of good projects, contracted projects, and so are the Canadian markets. So even throughout the COVID crisis, we didn't really see any disruption in ability to raise financing for good projects.
Are you expecting that pool of financing to sort of rebound after this year?
On the tax equity side?
Yeah. Yes.
I think 2021 might be a recovery year. I don't have a great forecast, or I don't think there's any clear views. And it was the banks and the financial institutions that were the primary players in that market. So I think it's yet to be seen what their full year 2020 will look like and when they'll be back. But I am hopeful that they'll be back sort of to the latter end of 2021.
I guess what I would add there. Sorry, yeah, what I was going to add there is I think tax equity still is there. It has been there this year. I think maybe a little more selective. I think, again, for good quality projects with good offtakes and with institutions that you have strong relationships with. I think here in times like these, relationships are important. And so as long as you're maintaining good relationships with those tax equity providers, and have good projects, you're still able to source, competitive tax equity. And that's what we've experienced in our projects in New York and California this year.
Got it. I want to touch on ESG a little bit. It's something that our clients are increasingly sensitive to and asking about. So two of you, TransAlta and Superior Plus, your businesses are dependent on fossil fuels. And I'm wondering if you are at all looking at transition financing as a way to diversify your portfolios or clean up your portfolios?
I think I can take that question on sort of overall the trends and where propane fits within the market. So certainly, we've seen a shift to higher carbon emitting, or a shift from the higher carbon emitting type fuels, in particular from how it would impact us, sort of diesel, heating oil, shifting then to sort of greener fuels. And from a carbon emitting perspective, propane is sort of similar in that to natural gas. So, it's still carbon emitting, it is less. So it does benefit us as a propane distributor, because we do see, our supply to businesses and communities does help them from a transition perspective as they move towards their carbon targets. So, internally, we're obviously addressing, similar to other companies, where we can from a fleet perspective and being more efficient with certainly our logistics, but as well as converting our vehicles to propane vehicles, which are, again, less carbon intensive than some of the other fuels, clearly. So again, we're seeing legislation. It's a bit of a challenge from our perspective. We are a good alternative for generators and other places And as a result of that, we are a good transition fuel and lower. So from that perspective, we view that, longer term, obviously we have to keep addressing and moving forward. But, the move from that carbon emitting is pushing it towards where our fuel can help people achieve their goals as we go through a transition.
Yeah, I'll just add, last year at our investor day, we set out our strategy for the next couple of years, allocating about $500 million towards renewable projects that we're currently, shovel ready and ready to go. And some of those are under construction, and a couple should be coming online here very soon, including our first battery project. And on top of that, we allocated about $900 million for converting our coal units into natural gas. That program is underway, and actually our first unit is under outage right now and should come back up in a couple of weeks on 100% natural gas going forward, with remaining units sort of tagging along sort of in the next calendar year, so that by this time next year the amount of generation from coal will be very minimal if any. The conversion to natural gas even opens the door for further technologies on carbon capture or hydrogen, which are very interesting evolving technologies that I think will be a big part of the solution, but they're a ways away.
So Beth, it sounds like you are pretty bullish on the distillate business, or propane anyway, performing even as investors become more concerned about climate change. So I'm curious how you see that business evolving, let's say, over the next 10 or 20 years.
Yeah, I think it's, when you just think about it, propane fits basically as a necessary remote fuel. It has its place in areas that aren't serviced by natural gas, or where electricity isn't viable. It's certainly a very good alternative where there are things, if there is a natural disaster or in instances where the electricity grid isn't working. Certainly it provides, what we have seen is a bit of an uptake in areas where people want to use solar panels for homes, et cetera. And in those particular instances, it's good as a backup generator. So again, when you refer to distillates typically in our business would be heating oil. And that's certainly something that, as our business, we have divested a lot of our distillate assets and would continue basically helping convert sort of heating in houses, et cetera, to propane, which again is lower carbon. I often like to say, if you think about propane, think about it like portable natural gas.
Since you bring up backup power, I'm reminded that we've had a lot of pretty significant natural disasters here in the U.S. In fact, we now have a Category 4 hurricane that's heading for the Gulf Coast. We've had wildfires, we've had blackouts. So I'm curious if this changing climate situation and in more extreme weather events, how you're sort of factoring that into your business strategy.
Yeah, and I think from our perspective, we would look again to the backup generation. This is also, if you want to think about it, just simply from remote communities, from a Canadian context. A lot of times you have diesel generators, propane generators certainly have been developed such that is a less carbon intensive opportunity. And again, is transported by rail, transported by truck if there isn't rail access. So when it comes to the natural disasters, et cetera, again, this is where you get back to that. It's good as a backup or a redundant generator. And again, when you think about homes, smaller businesses, commercial type businesses, I think you also have a benefit as you start seeing it where you can, if there are difficulties to build grids, et cetera, you do have the ability to use propane. There are instances actually where we do use it as a gas grid. There are instances in Western Canada where you do have entire towns or strata communities that are supplied by propane. So when these things happen, being a remote fuel that can be transported, not with a large grid, it is helpful and will take its place, right? As a remote fuel that does work in a lot of instances.
Todd, would love to get your thoughts on that. If you have any concerns about the risk that extreme weather events presents to your assets, or even your ability to distribute power.
Yeah, I think we have a broad range of assets, and so there's really a mix of grid connected generation. There's a combination of behind the fence and a fair amount of remote operations that we have down in Western Australia. So security of supply is always something top of mind. A lot of our remote operations are for industrial customers, or even a lot of our behind the fences industrial customer supplies. So certainly the facilities are designed to operate with certain amount of natural disasters. Our facilities in Australia are, cyclone ready, and have gone through a number of cyclones even during construction. So definitely something to keep in mind. We did have some, very serious flooding events here about 5-6 years ago in Alberta, and our hydro facilities. I won't say they were undamaged, but they performed very, very well during those flood conditions. So always top of mind to keep ready and keep reliability of supply.
Switching tracks here a little bit, Julian, I wanted to ask you about the prospects for publicly traded yieldcos after Brookfield absorbed TerraForm. Should we expect to see more of those at some point, or has that moment passed? And if we will be seeing more, under what conditions would be needed for that?
Yeah, that's a good question. I would say, to a certain extent, that yieldco model and the proposition and the return proposition that came along with it, with this, 15, 20, 25% growth annually, just isn't a sustainable, or wasn't a sustainable model. I think, and that's where we sort of saw an opportunity when we looked at TerraForm and the acquisition of the TerraForm business. We saw that as sort of an opportunity to take fundamentally a very solid group of assets and solid business, but with outsized sort of growth prospects, and take that into our business and have a more manageable sort of growth trajectory, and very much more of a focus on growth for value as opposed to growth for the sake of growing. So I think there is an opportunity, I think, for us to continue to acquire businesses such as TerraForm going forward. I think the yieldco model, I think, as pretty much, passed. I think you're seeing other types of businesses at a smaller scale. There's a lot of talk around SPACs and such going on right now. But I think, to answer your question, I think there are very few yieldcos left, and I think the way things are evolving, there will be less and less going forward.
Great. Switching again to talk about the Paris Agreement, there's a lot of talk right now about what the Paris Agreement will look like in a year or two, given China's announcement that it plans to be net zero by 2060, and the prospects of the U.S. rejoining the agreement under a Biden administration. So I wanted to get each of your takes on what implications there might be for the power industry under a revamped Paris Agreement.
Maybe if I could start on that one. I think, the outcome of the U.S. elections, for us, the way we see the business, will have limited impact on the business. I think there is a broad movement right now towards decarbonization. And it's in the U.S., it's happening globally. So clearly what we're seeing is not just central governments sort of setting ambitious targets, but we're seeing now states and, U.S. states, we're seeing municipalities, we're seeing corporates set very ambitious carbon reduction targets. And so we see significant growth coming out of that. And we also see another meaningful point, I think, that people sometimes overlook, is that the cost of wind and solar asset is now sort of on par, even in many markets, below the cost of generating power on a fossil fuel basis. And so it really makes economic sense for everyone involved to buy renewable power or invest in renewable power assets. So I think although politics will help and governments will help in sort of setting the strategic direction, I think we're seeing a broad movement that will just further accelerate the decarbonization of the grid and create opportunity for businesses like ourselves to continue to grow.
Todd or Beth?
Yeah, maybe I'll just jump in. I would echo everything that Julian said. The trend toward ESG, the trend toward clean generation is full speed ahead. So I don't see that slowing down. I see the demand from customers, from investors, and from governments as well. And you know, similarly, regardless of whichever party comes into power, we're still optimistic that there'll be lots of opportunity for wind and solar development. Clearly, under a Biden administration, the amount of money flowing into the industry will probably be much larger. That could create tremendous more opportunity and/or even more dollars into research and development of new technologies. So it'll be interesting to see.
Yeah, and I think, I mean, you have to echo, it's quite clear, the movement, regardless of, longer term, regardless of who's voted in, you're going to continue to have this, I'm going to say, path to a less carbon intensive economy. So from that perspective, I mean, it is coming and it is something that's there. Again, from our business perspective, being a remote fuel and less carbon intensive than other options that people are currently using, in these instances, we are a good transition fuel. So from that perspective, certainly from a vehicle perspective, propane vehicles are less carbon intensive than typical fossil fuels used to drive vehicles. So from that perspective, I mean, there's certainly a role to play in the transition as we move towards that less carbon intensive. And I agree, there's a lot of opportunity in the business as you look at renewables, and as that change occurs, where to move as entities, there'll be a lot of opportunities that everybody can look at and certainly play as we go forward.